chart number 1, we discuss the general health of the market, overall direction. We talk about the past, and we, of course, delve into where we think the future is going, where we think the markets are going. We're talking about gold and equities, S&P and NASDAQ, of course. As usual, we start with gold. This is the chart of gold. This is a daily chart of gold here. And we will see clearly on the bottom here, the support channel, the 50-day exponential moving average, starting at 38.90 on the XAU. As far as resistance, I will repeat that the low from the 17th of October, the low was 41.86, will pose a major resistance for the markets whenever they get there, at least the first time. So whether it's today, tomorrow, next week, the first time we get there, we will be selling 41.86. And I want to add one more point. The day we drop big, the 21st, that's a major day. That's a historic day, 5.5% or so in one day, 290 points from high to low. The midpoint of that day, the middle of the range, okay, it's about 42.25 or so. This will be also a major resistance. So now we have a channel. Now we start at 41.86, start of the resistance. That's the 42.25. That's where we're going to find the most resistance in that zone on gold. So we'll be selling gold if it gets into this zone, starting 41.86. By contrast, we'll be buying gold if we drop here. Keep in mind, the average true range on gold is now $75 a day. This is well within the norm. It's now normal. It's not 150 a day. 75 is less than 2% movement of the price of gold. This is more normal, and we expect more of the same. So that's what we have for now. Now, as far as what we do today, we'll come back at 9 a.m. Eastern time and talk about what direction we'll take, whether gold or equities. Let's take a quick look at the NASDAQ here. So here's the NASDAQ, bounced beautifully off the 50-day EMA. We like the 50-day EMA. We use it. It's a huge indicator when and if markets are uptrend on the intermediate and long-term charts. So basically, you have to have an upward slope on the 50-day EMA. It has to be above the 200. And you have to be making higher highs, higher lows, at least for 6 months. And that's the case here. And then we can buy pullbacks to this 50-day EMA. This applied to gold and equities for now, okay? So that's when we use it and we rely on it. And it bounced off of it in a very nice way. What happens now? Now, I like the midpoint. What I mean by midpoint is I would take the highest level we reach so far, or whenever we reach it, take the lowest level and look for the middle. This move so far from 24,600 on the NASDAQ to about 25,660. That's 1,060 points. Half of that is about 530. So if you subtract 530, it's going to put you at around 25,100 or so, 130. That's a good point. That's a good entry. 25,130 on the NASDAQ would be my entry to reload and add to my existing position long. We will not be selling short. We'll only be exit long into the rally. And of course, preferably near the highs. NASDAQ moves within 490 points a day. S&P moves within 80 points a day. These are important numbers. That's on average based on last 9 days. We base our risk for the day, how we enter, how we manage risk, profit expectation based on a percentage of this number. We also use it if the markets are sideways. We use 80% of the average true range to trade within that. If we believe in any given day the markets are sideways, we will not be expecting huge moves. So we will use 80% of that number. So this number, the average true range, is used for many reasons. First and foremost, for managing risk. 40% of it is to manage risk, max risk. That's what I have for now. We'll come back today at 9 a.m. and talk about which direction we'll be trading, whether up, down, or sideways. Until that time, I wish everyone the best of luck and thank you.